Welcome back to Startup Accounting 101. This is a video series for founders to understand accounting fundamentals for running a business. We're moving through the financial projections template, and it's free from score.org. Just go to the template gallery and download the file. I'll have their link in the description below. So this video will cover tab 7A, which is the income statement for year one. It's quite exciting that we're finally getting into financials. So I'll share with you the philosophy that I have when it comes to financials. I believe that they should tell the story of the business in numbers. So when you look at an income statement, you should get a general sense of the kind of business it is, what kind of products they sell, the expenses that might be important for the business. And the first set of financials you'll typically look at for any business is the income statement. It's also known as a profit and loss or a P&L statement. And this statement shows basically all the activity impacting the profitability of a business. And it's over a period of time. So the income statement here can be presented monthly like it is in the template. So all the months are here. It could be quarterly, like in this row, or annual totals, like it is in column O. And all of these businesses will use all of these different layouts to make decisions. Really depends on what is needed, what sort of trends or profitability analysis is needed. And if you notice, there are no orange squares on this tab. On the prior tabs, there are sections like this, orange sections where you input information. So what that means is that income statement is driven by inputs on all of the other tabs. And all of the work that's been done so far in the template is coming into the income statement. And likewise in a business, a member of the accounting staff, they're going to book a whole bunch of transactions, do a whole bunch of work to generate financials, right? Just like this. An income statement. So for this overview of the income statement, I'm going to sort of hide or collapse down the months just so that we can look at the totals. It's the same concept for all of the months. So we're just going to look at the totals and we're going to look at two different examples. So it's the income statement from the template and then just a sample company. That way we can kind of compare and contrast between the two different statements. They both are very similar. They both have the same major sections or line items, but there are many different ways to design an income statement. And it's best just to structure it in a way that helps you understand your business. Okay, so let's just get started with looking at the income statement and all of the line items in an income statement. So as the income statement, it always starts with income. So to show the template side and where the numbers are coming from, I'm going to split screen it just to show where the numbers are coming from in our template. So we are starting from the top of income, so we're starting with revenue, and in this template that is coming from the sales forecast. So there is a sales line item here in the sales forecast that's getting pulled into the income statement. So that's these numbers here. And this, I would say this is top line sales or gross sales. Because if you compare it against the sample company, the sample company has net sales. So what that means is that the sample has some deductions from revenue, some that's giving us the overall net sales. So the first line item or first section, revenue, sales, and profit, they're all synonymous. It's going to start with revenue. And then the next line item or section will be cost of sales or cost of goods sold. So on the template side, we have COGS like just right underneath the sales on the sales forecast, and that is getting pulled into the cost of goods section. And again, the COGS are any costs that are directly related to sales. So that's why this sits like right under the sales. And this could be like materials, labor, machine hours, storage, inbound shipping, like all of those costs are directly related to sales. And so they kind of sit right underneath in cost of goods sold. And then we reach our first sort of subtotal known as gross income or gross margin. And so this is, you calculate this by, sales minus COGS equals this number, which is known as gross income, gross margin. And this is an important metric to know how profitable you are just by providing your goods and services. And as the template says, it is margin for sustaining the business. So this number basically has to pay for everything that comes underneath. So all of this is paid for or by the gross margin. So after this subtotal, this metric here, the next sort of major section that comes in an income statement are the operating expenses. And you can group this by a number of different ways. So the sample company has it by expense type. So you have distribution costs, you have administrative costs, and each has its own little sort of subtotal here. The template has it broken down by payroll, which is coming from this payroll tab. So payroll is its own section. And then there's operating expenses, which comes from operating expenses here. So all of this is just getting pushed into our income statement here. And in the template, it's alphabetical, just like A through Z. And I will say that most accounting software does the same thing. They will automatically just alphabetize all of the expenses. So one of the things you can do coming into whatever software you have is to think about grouping them into categories that make sense for your business, something like this. And so you can have categories and then subcategories just like this. And then so with the total operating expenses, so once you have all of those, then we come to our next sort of major metric. So we have another subtotal here, which is operating income or the income before other expenses. So there's a note here that is also known as EBITDA. Okay, earnings before interest, taxes, depreciation, and amortization. So this metric allows for a comparison across different businesses, which might have different levels of taxes, depreciation, or interest. And this number should be used in conjunction with other metrics as it does not give a full picture of the health of the business. Okay, so this is a metric called EBITDA, which is quite an important metric. And it kind of shows like the operational efficiency of the business. Like, how efficient are you at just sort of operating the business? If you have a line of credit, if you have a bank covenant, sometimes they will really want to know what this number is. And so once you have this metric, the next major section that comes underneath it is other income and expenses. In the template, we only have expenses. In the sample company, we have some other income items like interest and gain on the sale of property. So once you have this, you have a little subtotal here. You've got total other expenses. Then the next line item that comes next is another subtotal. And this is the net income before income tax, or income before taxes. And so that is EBITDA minus this next section, which is other income and expenses, equals net income before income tax, also known as earnings before tax. So EBT is an abbreviation for this line item. The next major line item are taxes. So this tax calculation, it's from the tax assumption. So we got 21% for the C Corp. So this is the tax that I'll be paying. And then there's also a tax line on the sample company as well. And then we reach the final line item in the income statement, which is the net income or the net profit and loss line item. And so this is perhaps the most important metric for an income statement, because it shows the profitability of the business, taking everything into consideration. We've got all of the sales, all of the expenses, other expenses, and taxes. At the end of the day, are you profitable or are you not? So for my template, my candy bar making business for the first year, luckily I am profitable by about $76,000. So now we have reviewed an income statement for the first year. The next video will be looking at the income statement for years 1 to 3. Like and comment if you enjoyed the video. Please subscribe, and thanks for watching.